It's awesome to be in studio with Craig Dickens, CEO of Merritt Investment Bank, CEO, chairman. What's the title that you love to have?
For you, I'll be either.
So good. The man behind the curtain at Merritt Investment Bank.
Great to be here.
It's fun to talk because I just like talking with you. First of all, you're like one of the smartest guys that I've met in person. I love your mind for business. So when we go into the weeds and we're talking about a client, an opportunity, an industry, a deal, it just amazes me how much you know. But you're also just a fun, good guy to talk with.
Well, and in all fairness, I'm going to kind of put that right back at you because, you find people that you connect with in life and on the same kind of wavelength. And it's been a joy to get to know you over the last couple of years. And really what you're doing at One Accord is phenomenal. So we're behind you 100%.
Well, thank you. Behind and side by side.
Side by side often, yeah.
Full disclosure, Craig and I, One Accord, Merritt Investment Bank, we work together often and we work together well. In fact, Craig was the recipient of our partnership award for the year, I guess that was 2025 because it was last year.
And you're 25 years in existence. So honoring that as well. So
that's good. That partnership, if we just kind of unpack that a bit. So Merritt Investment Bank, you're an investment banker.
Mm-hmm.
Most of the people that are watching this know what that means. Some don't. So let's just start there. What do you do, Craig?
Yeah, that's great. And I like to think we bring a little different cut to the market because we're also former entrepreneurs. Many of us have had our own exits, so we know what the grind is like and to get to an M&A event. So we bring a little bit of that, I'll call it holistic, but approach to investment banking. Yeah, we can crunch a number like nobody's business, but we also know what gets people out of bed, feeling joy about the work that they do, and then really help entrepreneurs to kind of grab the brass ring. Because not everybody, as you know, will exit or even prepare to exit well. So it's a combination of getting the numbers right, setting the stage, and then ultimately getting a deal over the finish line.
And that getting the deal over the finish line, we say M&A, mergers, acquisitions. Mm-hmm. You help owners of companies sell.
Yeah.
Maybe you help owners of companies buy, acquire, maybe acquire to sell.
Yep.
All of that, the buying and the selling and the advising. Do you do fundraising or, capital raise?
Yeah, we focus on really growth equity or debt to help an entrepreneur kind of achieve their vision. Yeah. A lot of times, as you know, being, a former banker yourself on the commercial side, the bank will lend you just enough to let you just enough to make life interesting.
Or not quite enough.
Yeah. And, a lot of entrepreneurs have a vision where they want to grow the company, but they need additional capital to do it. So oftentimes we'll bring in outside partners to provide that capital so that they can execute their visions.
I want to get to the comment that you made about being operators. So little flag there. I want to ask about your experience. But before we get off the investment banking, so I'm an entrepreneur and I need capital more than the bank is willing to, allow me to use rent short term. What's a deal size, a funding amount that makes sense? Like, I'm not going to come to you and say I need, $100,000 line of credit. Mm-hmm. Where does it make sense to engage with Merritt Investment Bank from a capital need?
Good question. And, again, I'll go back to that holistic. We're interested in helping an entrepreneur achieve their goal, irrespective of capital and deal minimums and all those things. And as you and I have brainstormed many times on behalf of your clients, what does this look like? What does this need to look like to accomplish their goal? And sometimes we're the right fit, sometimes we're not.
Yeah.
We think about the best capital partner, the right size of partner. And as you know, right, the SBA is a great resource if you want a couple $1 million, but if you want 5 million, 10 million, if you really have an ambitious plan, that's probably where we're the best alternative for that other than traditional or SBA or even, angel investing or talking to your CPA. Hey, I'm looking for $1 million. Do you know some angel investors that can help me out? That's pretty much where we fit.
Yep. And, I can just give testimony to you being a great resource as we were looking to acquire, to buy the building that One Accord operates out of. Mm-hmm. I called you, Craig, I'm looking for options. And, there were a few, it wasn't you, it wasn't Merritt, but you had some, contacts and connections. And so I think you're always happy to take a phone call when somebody's looking for.
Absolutely.
Yep. Okay. As an operator, so this is something that I just know makes you unique in the marketplace. One of the reasons why you deliver value in a unique way is because you've been in the seat of the entrepreneur. You've sold businesses yourself, not like businesses that you owned. How many exits have you had?
13 exits, and that was and along the way, some of those exits were aided by buying other companies and bolting them on to the existing companies. So a little bit on the buy, but then on the sell to exit those businesses.
There is no replacement for experience.
Yeah, blood pressure, the whole 9 yards, right?
Yeah.
You learn to sweat and not sweat, right, at the appropriate time if you've been through it a few times.
I think it was you that said to me for the first time, and I've since heard it many times, that every deal dies at least once.
Actually, 3 times nowadays.
Okay. Yeah. And so I just, bringing your experience as having bought and sold your own companies, your kind of patience and care and understanding and grace in that process when the deal starts to fall apart, and you just know, like, okay, this is normal. To then carry the founder owner through that process, there's no replacement for experience.
Yeah, and those entrepreneurial roots, and this is where I go back to our mutual clients, right? It's not easy to be an entrepreneur, right? The tax man, the interest rates, the employee issues, and sometimes your customers can be really difficult as well. It takes a lot of grit to be an entrepreneur today.
Yep.
And so we honor that and respect that. We also have lived it.
Yeah.
So we know not everything goes perfectly, doesn't go to plan, and sometimes you don't fit into the box, right? So ultimately, we kind of tap into that and find a way to help that entrepreneur get to the next step. And having lived through that, and when a deal gets difficult, it's that same grit and entrepreneurial creativity. Yeah. Okay, we ran into a wall. We're a little bit bloody. We don't want to do that again. Let's pursue this path. Or maybe if we kind of position the company a little bit differently, we'll get a better outcome. And I'm going to kind of feed back to, I don't want to overuse sports analogies, but it's all in the preparation. And that's where we find, working with One Accord and your team, if we can prepare well and anticipate the red flags and the do not pass go items, huge. 9 out of 10, deals, if they're properly prepared, we will find a buyer. But if there's things that were not properly prepared, or an owner says, oh, that's not important to me, like good accounting. Yeah. Right. Yeah. It's like, okay, let's work on that so that you can get to that.
There's so much there. The separation and the preparation. Good accounting, like that's just, I'm going to say that's table stakes, right? The books have to be clean. They have to be accurate. We were looking 3 years, 5 years back, 3 years back.
You can get away with 3, but there will be certain buyers that'll want to look at 5 years. It's like, all right, how did you do in COVID, right? So, so people will look at that as an indicator of, future, if something happens, where you will be. But generally 3 is the number, but some folks like to go back.
What are some other things that, in your experience, like, and even if you've got an anonymous, like anecdotal areas where owners ought to be paying attention from that preparation lens, and maybe also how far in advance does that preparation need to start?
There's the age-old adage, begin with the end in mind. Even if you're a startup, you should know who you're going to sell to, where you're going to go. Now, you may pivot and you may take a circuitous route to get there, but you really got to be prepared throughout, because instead of a fire drill when you want to exit, you're building the systems and processes and reporting and documenting your handbook and, all of those little things that can derail a deal. Even your corporate minutes, right? Everybody says, we don't keep corporate minutes. So like, now you're paying a lawyer to go do those things. So, I would say begin with the end in mind, and the definition of a valuable company is one that's always in a state of preparedness. It's not a fire drill, right? So you're building those things in. And this is where you guys really work on this, is a valuable company is one that doesn't need you in it.
Yeah.
You have people on your team that will execute, and you can spend time working on the business and the vision and where the business should be going and responding to the marketplace. Those are kind of two huge preparatory pieces that always help.
So I just heard you answer my question of when should you start as at the beginning.
Yeah.
And I love that. I actually did a workshop. It's available on our website. It's called Build It to Sell It, and You Might Not Want to. And I just had this picture as you were talking. If at any given moment, somebody just knocked on the door and said, I'd like to buy your company for $100 million. Can I look at can I look at everything? Would I be able to say, yeah, sure. Right?
Yep.
It's not that case for me today, just to be
Very true, yeah.
But I am not the story of the cobbler that doesn't wear shoes. We're just not there yet, but we are working towards that. Mm-hmm. Right. So that's an intent that we have as we, assist clients through this too. If we go back 3 years or 5 years with financial statements, that's kind of a clear, got to have clean financials 3 to 5 years before. If I was to sell my company, let's go through a couple, types of buyers or transactions, right? I could sell it outright.
Sure.
I could sell a part of it. I could sell it all, but then stay on for a little. Like, what are some of the options?
Yeah, great question. And then we spend a lot of time, as you do, and you do even succession work to get their minds thinking about how do I give the owner the freedom to make that decision versus have a buyer dictate, I need you to stick around for the next 5 years to help run it, right? That handcuffs you a little bit. So the buckets, if you will, in today's marketplace are broadly speaking, strategic buyers, those that know your industry or in your industry and might want to buy you. And they probably have a management team that if you got hit by a boss or decided to leave the day after closing, they could probably run the business. Mm-hmm. Then there's financial buyers that look at your business and say, okay, you've built something that is worthy of outside capital, and we think we can grow it to the next level, further professionalize it. Financial buyers, private equity, and others, they're going to want you around, or they're going to perceive more risk than a strategic buyer that has, the VP of your division, right, would parachute in and run it if you left. Private equity doesn't necessarily want to run your business. So you either have to develop a really strong second in command leader that can step up, and hopefully in that preparation phase, you've given them 6 months, 12 months of P&L responsibility, decision-making. As the owner, you've gone on a month-long vacation and not called in.
Build it to sell it, and you might not want to.
Yeah.
Because you can take a month-long vacation.
And clip coupons and take that free cash flow and put it in your pocket. So those are the two broad categories of buyers. And, you really have to, those that are what we call rich and ready, right? They've done well in their business. They don't, have a whole lot of at risk, and they want to leave. They have a lot of freedom and a lot of choices, but not everybody wants to own all of their business, and they want to take some chips off.
Yeah.
But they still want to be involved for the next 3 to 5 years and get that second bite of the apple, right?
So that's a scenario where I might sell 60 or 80% of my company.
Yep.
I'll hang on to 20, and I may have a role in the company. It may not be the same role, but there's definitely a role there. A friend and business colleague of mine had 3 bites at the apple, if you can believe this. First was an ESOP, then it was a partial sale, an 80% sale, and then there was the third full exit. And at each level, the enterprise value increased, and holy smokes, was that awesome.
Yeah. And we've had several clients go through that same thing. And they, interestingly enough, not one of them thought they'd stick around beyond the second bite of the apple. But as the enterprise got bigger and their role got bigger, when I say bigger, not necessarily hands-on, but they were out on the speaking circuit, or they were out talking to other owners, right? And so even their career trajectory changed as those bites happened. That's the coolest thing in the world, when you're like, wow, I really enjoy what I do increasingly because I'm not doing all the stuff that I really don't enjoy about the business, right?
Yeah.
So
that strategic buyer has the accounting and the HR and the operations team. And
how many owners, even if they have a controller or a CFO, like they're involved with negotiating their bank line of credit?
That's
now you have some other private equity group or somebody who's really inside the capital markets doing that. Now you can do the stuff that you love.
Yep.
So
we've got financial buyers, strategic buyers as being kind of these 2 buckets. I'm imagining that the prep for a strategic buyer, the window of prep time could be shorter if, they want to buy, the revenues, the assets. They're just buying I don't know. I don't know the right words for this. You do, but
Buying customers mostly.
Yeah.
They want a slice of what you've got.
Right.
Because they've stalled in growth, or they've gotten, we just need $1 billion customers. Well, let's not, lose track of that.
Or maybe my company is causing a little too much noise in the market and they want to take me out as competition. There's a strategic reason that they're buying.
Or technology.
Yeah.
Sometimes smaller companies, you'd be surprised, they develop this technology and they win disproportionately in the market. And now the big boy looks at it and goes, if we had that technology and we bought the company, we could spread that across 10,000 customers and we paid for that acquisition 10 times over.
And yet that strategic buyer, they're going to due diligence. What may look like a manufacturing company actually becomes a value-added reseller, and the strategic buyer comes knocking on the door and says, hey, we're going to give you a really nice price for your company. And you think, cool, I'm out. This is going to be easy. They go into diligence and say, well, it's not what it looked like from the outside. We'll pass.
Yeah. And
that's a huge risk to the owner. And I'm kind of setting this up as the unsolicited offer. I'm in an active conversation with someone right now who had an unsolicited offer from a strategic, and the number that they offered is a really decent multiple. I call everybody Bob for anonymity.
Sure.
Right. So Bob, I want to caution you on this, right? An unsolicited offer, preemptive. You've used a word. We've had this conversation before. I haven't told you about this particular deal. But I quoted you to him and I said, I think less than 50% of these are actually going to, go through.
Oh, way nice. Yeah.
And so I would just caution you. He's been playing his hand really slow. It's good. But that strategic coming in, they're going to offer a price, lock you up in an LOI, and then try to retrade you down if even they're going to take it. And if they're a strategic, they're also going to be looking, under the hood. And if they're a competitor, like this becomes a real risk. So I'm teeing this one up to say, my advice to every Bob out there is don't do this alone. Call Craig. Right?
Yeah.
I would never advise my mother to sell her home without a realtor. I would never advise anyone in my family or my friends to sell their business without an expert. It just wouldn't do it. That was a bit of a sidebar. I want to go back to the strategic and financial. In this case, a strategic buyer may come in and the prep for that may not be as intensive as is necessary for that financial buyer. You talked about developing the next generation of leadership. You talked about the owner taking a month's vacation, that the business can operate on its own. In our experience, that's a 3-year proposition.
For most middle market companies under 100 million, definitely 2 or 3 years to get them really well prepared.
Yep.
And what I'll call bulletproof. Otherwise, you got a business to run and you're worried about growth and you're worried about employees. There's a lot to worry about as an entrepreneur, but this working on the business and the preparation phase, hugely important. It's kind of counter if you're growing your business, you're not thinking about risk avoidance, right? You're thinking about growth. So it's definitely, and that's really where those strategics come in. Well, look at the one we just worked on. You did a success plan for this client. You gave them advice. We took them out to market after your work was done. We were very careful because we did have a preemptive buyer. And we said, look, the odds are about 10 to 20% that this will actually get to close. And here are the risks. They're going to understand all of your technology and your patents and all of that. Well, lo and behold, that strategic buyer, the tariffs, they had exposure to tariffs and they had a couple other concerns about, the company. So they backed down. So then we ran a full process to bring them to market. We got them to close, but ultimately as an entrepreneur, you have to be prepared that not every deal is going to get to fruition. And we might need to have, 2 swings of the bat to get this thing done. So that's a real life dynamic for sure.
Well, and I just take a moment to double click into that one, as my friends in technology would say. That is it's a wonderful testimony for your ability as an investment banker to get that deal across the finish line. We did some upfront work in that preparation for the company to sell. And as you said, there was a preemptive offer. And as we talked about at some point, every deal runs the risk of dying once or twice or thrice. And so for your ability to carry them through and, just by orders of magnitude or kind of common size, I understand that deal actually sold at some, 20 to 25% above what the original kind of market value was. So kudos to you, right? Well done.
Well, it was built on the previous work as well, right? The entrepreneurs and the work that you guys did, and I'll double click into that in a minute as well. But yeah, I mean, that deal was a 10 multiple. It was a good deal. They had, for a small company, they had some, their revenue run rate was about 30 million. So it wasn't a huge company, but, they had some secret sauce. Mm-hmm. And I would say, for those entrepreneurs out there, and you asked earlier about, what are those things that can, make it or break it, listening to your advisors, right? Mm. You guys, founder, own and run business, had a small team. You guys advise them, say, hey, you need one person instead of management by committee, so that when a strategic or a private equity group comes in and says, who's the leader, the de facto leader? In our business, we call it one throat to choke, right? They want to know who's in charge. And that your advice helped them get that multiple and craft a management kind of org chart that said, here's our go forward leader, here's where we're going in the market. And that was hugely valuable. So it's like, how do we orchestrate all of these things? And it's always just a combination of teamwork and the entrepreneur listening to good advice. That's key.
Well, and the good advice, here we're just stroking each other's egos here, but it's really true. Like, you and I had maybe one or two conversations kind of as that was going through. And here again, your experience personally buying and selling companies to kind of shepherd these entrepreneurs through this process, the deals can blow up. They can fall apart, but you kept steady hand on the wheel and saw it through. And took them through the full process. They could have just taken their eye completely off the ball in this one preemptive and not gone through the process, not gone through the full. So I said earlier, and I mean this with all sincerity, you're like one of the smartest guys I know. And
I just have a lot of scars, and I learned from the scars.
The wisdom from experience. You could do what we do. I mean, you could be a consultant. I'm sure that your clients ask you for advice. Craig, what do we do? And I'm sure you tell them. Why don't you do the consulting work that One Accord does?
Great question. I think the nature of our business, and then a lot of investment bankers get kind of a bad rap for being transactional. I think the value that you guys bring far and away exceeds kind of our capabilities in that area. Because you're patient and you're thoughtful, and where we want to turn knobs and dials and, talk about EBITDA and things like that. You want to understand how the company works and what are the value drivers and what you can do to kind of increase that value along the way. I think that not a lot of people can do that and do that well. There's folks that try, but the depth that you guys are willing to go into and the bench that you have on your team. I mean, I just had a conversation on another deal with one of your guys that was thinking about, change in control agreements for an upcoming potential transaction and a, kind of a profits interest unit or an employee compensation program that would incentivize everyone. We look for those things and we go, yep, it's in place and yep, it's good. But the actual crafting of it and being thoughtful about it, we rely on you guys heavily for that because, we are a bit transactional. You want to bring in the, SEAL team to get the deal done.
Yeah.
But you need the full Navy behind you, right, to get it done well.
That's a really good analogy. And, there was a time in the history of One Accord when we wanted to play investment bankers. And we don't do that anymore. Mm-hmm. We don't. Because you are an elite team of SEALs, if I just say it that way.
I got to sit up and puff out my chest a little more and pretend I'm a SEAL. Yeah, I'm with you.
The skill sets are different. The economic incentives are different. The motivations are different. You don't get paid if the deal doesn't close, right?
Yep.
We, on the other hand, we just get paid a consulting fee. We're paid cash on a retainer as we go, but you put a lot into a deal. You have shared economic incentives with the owners, right?
Yeah.
And these are two very different economic models. I can't do that in my business. In your industry, you can't charge those fees on a monthly retainer because the value is really realized at that kind of transaction.
Yeah, and a lot of people, just in terms of educating folks, there is a risk premium in our fees because it's contingent on actually getting something across the finish line. Oftentimes, we can't control if a major customer leaves one of our clients right in the middle, and revenues and earnings go down. Oh well, right? Let's put it on pause in the best interests of your deal. Let's pause the deal, go back to work, get some help, right? Get it back to where you want. So yeah, we charge a contingent-based fee, and ultimately we walk alongside the entrepreneur for a very short window. It's 6-9 months typically, and where you guys can have potential impact over that 2 to 3 year period to get them to the point where that risk premium isn't so great of actually getting to a deal.
Yeah. And so just in that, my preferred MO is when we engage a client, and this is what we do, when we engage a client in the kind of preliminary diligence, like our first phase of our engagement, we bring you in or someone from your team. Yeah. And quite literally, we bring in a Merritt investment banker to be a part of our diligence team, looking at what are the economic opportunities for this company, understanding what the owner wants. Like you say, your goal is to get the owner what their desired outcome is. So we understand that together. And you help us to inform the plan to get them there. Conversely, if someone calls you, Craig, I want to sell my business, and you spend some time with them, and you think, well, Bob, you've got something here, but it's going to need some work. And Bob says, can you help me? And you say, well, yeah, let me introduce you to my friend Nick, right? So our relationship is such that, we are working with Bob, but really kind of for you. Like we become the outsourced consulting firm for Merritt Investment Bank, and you're in that conversation all along the way. But you get a quarterly report from us. Hey, here's what just happened. Here's the direction we're going. And we're, midstream with a few clients just like this that, before we went on camera, I was, here's where we're at with this. And that relationship, I think, works so well to benefit Bob, the business owner.
Bingo. Yeah.
Because he's got us looking at, everything that you need to do to get to a place. And he's got Craig that says, okay, when you're here, here's where we're going to go. And we're working together in the prep and then in the process. Yeah.
And I think our role through the lens of dozens and dozens and dozens of deals, and obviously some entrepreneurial background, is to, every company theoretically, has limited resources and they can only do so much. And where you guys look at the entirety of what can be done, and then you're thoughtful about your scope of work, we're kind of that, you're pinging it against us is like, is there bang for the buck?
Yep.
If we do this, will that translate to higher probability of close? Yes or no?
Yeah.
If we do this, will that translate to higher valuation at a deal? And that's where that relationship really kind of works well. You guys are doing the tough work of really helping that entrepreneur either change culture, change sales, change ops, right? Which all of that should flow into a better performing and hopefully a more profitable company.
So the fact that I can call you, or our team can call your team. So I'm hearing from a client. Client says, "Hey, I'm thinking about making a right turn." I'm like, "Well, let me think on that." Hey, Craig, remember Bob? He wants to take a right turn.
Yep.
And Craig says, "Well, the market's really saying that people that go left, they're having a much better time."
Right.
Or if you're gonna take that right turn, here's some things to think about, and that's the starting with the end in mind. So, what may seem like a good idea, some, a rabbit to chase down a trail. We want that expert advice that's looking into the, kind of the ghost of your future, saying, hey, 2 years from now, is this going to achieve the intent? And here's a great example. Another, client that we're working with. In this case, let's say it's I just feel like making up numbers, so we're not. I got to keep. Let's say it's a $50 million company, and they want to sell in 3 years, and they want to be a $100 million company. Ambitious. I love it. Okay, organic growth is unlikely. Given
Modest,
right.
Modest,
Organic growth to get to 100, to double in size over 3 years, right? It's one thing to go from $1 million to $2 million or $2 million to $4 million, but to go from 50 to 100, okay. So how do you get there? Well, you grow by acquisition, and you've been there. You've done that. If we create the plan to get to 100 million, grow by acquisition, what does that do to EBITDA in those 3 years? What does that do to the financial performance in those 3 years? We might achieve that $100 million revenue number, but as the investment banker that's going to take them to market in 3 years, you have got to know this, because you're going to have to unwind and retell that story to the prospective buyer that, listen, net profit, EBITDA, was this, but it really should have been this if we add back all those one-time non-recurring transactional expenses that bought this revenue. And here's kind of so here again, Bob, the business owner, says, I want to grow my company in 3 years and sell it. Hey, Craig, how do we do this right?
Yeah, so great example. And it's interesting. You and I know that there are certain folks that have, ambitions. And then there are other folks that say, well, maybe this is enough, or the ambitions are risky. So, you get to a certain age in your business, right, where if you run it for 20 or 30 years, right, probably your risk tolerance is a little bit low. So you really have to, again, this, so much of what we do is right in here at the client level. They have to know themselves, know what their risk tolerance is, how much work they want to do. You can provide them, here's the roadmap, here's all the work that you need to do to get to your $100 million exit, or maybe 50 is enough, right? Depending upon their risk. So you're right, though, it's got to be very thoughtful, it's got to be planned out, and you have to, have enough. It's like any sales pipeline. You have to have enough targets that you could reasonably buy and integrate into your business, and then capture the synergies. But that also takes, typically for one M&A event where you bolt somebody on, it takes about 18 months to fully realize, yes, we're on the same accounting system, and no, we don't need 3 accountants anymore. We only need 2. And our VP of sales, is mixed with director of sales, all that kind of machination. So, M&A is risky. So you gotta be smart about it, and get some advisors around you that has been there, done that, and can help you through that. Because a lot of CEOs think like the last crescendo of their career is, well, I'm going to go out and buy somebody. And it's sometimes the worst mistake of their life. If they don't do it well. And you don't want to buy for the sake of buying. You have to have, even if you're a $20 million company, you have to have a strategic rationale. Buying revenue, dumb idea. Even buying earnings to some extent, because there's going to be a cost to that, to your point. Our earnings are probably going to dip a little bit because it's never going to go perfect. And we got to write severance checks, or we got to, put our marketing and our people in their business, right? So there's a lot of moving parts and pieces there. So you got to get some good advice.
This is precisely the reason why I just appreciate you and trust you so much, because there could be, an opportunistic business broker, investment banker that's like, oh yeah, we can do that. We can do that all day long. We can help them buy, and then we can help them sell. But that cautionary, and again, from the scars, from the experience, is that what you really need to do? Does that help you achieve the goals that you have for your life? Right. And
again, I'll flip the question back to you in a second, but what I love about working with you guys, and even some of the succession planning and kind of keeping your clients' interests, at heart, sometimes the answer is don't sell. Sometimes the answer is take a little bit off the table, right? Put a little bit over here. Most entrepreneurs have 80% of their net worth tied up in their relatively illiquid company let's think about you and your family. Let's create that free cash flow, right? That makes you want to clip coupons and hold on to the business forever. Thinking thoughtfully, sometimes the answer is don't sell, change, get out of your company what you want to get out of your company. We see a lot of people that say, they can't quite let go. And we're like, look, hire a CEO.
Yeah.
You become the chairman, you go off and take your month-long vacations and go hunting and fishing and do what you want to do to get what you want out of life, or listen to God's calling, or whatever it is, right?
Yeah.
You can trust that baby to someone else. Now, you may swing and miss on the first replacement CEO, or you may aspirationally try to get your general manager to become a CEO. And again, that's where training, investment in your people really pay off. But we all have to keep in mind that, it's the client. And if we can help that client really find out what they want to do with their business, then we've succeeded. Doesn't matter what else goes on.
So good.
So let me turn something back on you a little
Please.
bit. So as we think about this, and your One Accord hat is on, and what are the 3 things, and there may be 1 or 2, but when you encounter clients and you think about value and you think about helping them get the brass ring, what do you see most where it's maybe the toughest advice to give, but what kind of advice are you giving those folks to really start thinking about value?
I don't know if it's recency bias, but it's that notion of bringing in the CEO and it's handing over control, giving the keys to someone else, whether they're bringing in the CEO and retaining the business or they're selling the company. There's this realization that particularly at sale, it's not yours anymore. And those employees, the people whom you've developed relationships over the years with, you don't have control over the decisions in their lives anymore. And that's a deeper conversation than most. Are you ready for that? Are you okay with that?
Yeah.
I see more than owners saying, I want a price or I want terms, they lean into, I want my people taken care of. That is so important to owners. And so that conversation, it takes 2 different kind of shapes and forms. If they are going to sell, okay, how do you feel? How are you going to feel? How are we going to deal with those feelings that you don't have influence or control? And some people just right off the bat, oh, I don't care. I'm going to have $10 million and right. But they do care.
Yeah.
Because
absolutely.
they're right. And or it's time for you to be promoted into the chairman role.
Sure.
And here comes a CEO. If you've never had a CEO before, I'm going to suggest that you bring in an interim. This is interesting. The nonprofit sector in America, they know, like it is standard operating procedure when a founding executive director of a nonprofit steps away, boards of directors always hire a 1-year interim executive director. Yeah. And then they do a search for a permanent.
So good. Yeah.
In the private sector, nobody knows this.
Right.
And I'm
we got to
like,
find the rock star, and that's going to be our next leader. And
No.
2 CEOs later, after 3 years.
Nope. So I would say to that founder, bring in someone that is interim. They're only here for a year. And your team knows that they're only here for a year. This is a transition. You've never had someone, this is new, because those relationships. And, you said that you're surprised at how many founders who sell an 80% and stay on, and said they won't stay on, but they do. And there are some who, they sign I'll stick around for 30 days and they're out of there after 2.
Yeah.
So that there's a mental and emotional preparedness that has nothing to do with financial statements. It has nothing to do with supply chain management or ERP or CRM. It's, are we ready for this? And so that tough question, that hard conversation is, are you prepared for this? That's the easy question. The tough question is to say, are you really? After their first answer,
Show me,
right?
Yeah.
That's it.
Yeah.
And then there's another equally important conversation it's the what's your number conversation, but it's the what's your number conversation after tax without what you're accustomed to, which is an annual income. So someone who's making $1 million a year sells their company and they receive 50 million, and the tax man takes some number there. So they've got 30 million in the bank, and that 30 million, is appreciating and it's paying dividends, but they don't have a paycheck, and it feels different.
Yeah.
Every distribution, every draw, every, payment that comes out of that feels like they're dipping into savings, which for decades was like, I can't do that.
Right.
So they're living an entirely different lifestyle where I used to have a paycheck and I had savings. Now I just have savings and I'm living off of it mentally, emotionally. Big shift. So we like to bring in the team. So their investment banker, their wealth manager, their CPA, their estate planner. Let's gather around the table in our office and let's talk about the next season of life.
Yep.
What's your number after tax, lifestyle? What's your lifestyle going to look like? And just another, if I put these in order, like, I don't know that any one is more or less important, but if I had to choose, what's your spouse think about this?
Oh, yeah.
Right?
Yeah.
Talking with someone, just in this conversation, he says, I'm ready, but my wife doesn't want me to sell the company. As the investment banker, you're thinking, well, then we're not, we're not ready.
This is kitchen table stuff here. This is real life. Yeah.
And so, that's a question that we ask.
So good. So many people are unprepared. They get caught up in the deal and the numbers and, we'll deliver a quantitative cadre of offers. Here's 5 offers that fit your criteria. Then the qualitative, and they're like, okay, how are my people being treated? What is this going to look like? What's the impact to me? But then so many are like, oh, I'm going to play golf 5 days a week. Well, they get, that ends after a month or two. And they're like, who am I? What am I doing? And have I asked the real questions? Do I have enough? Is this fulfilling? What's the next chapter? Some people run out of their businesses, and it's so much more compelling when people can run to something. And I know you're doing some work with a mutual client here that, you're digging into what's next for you, right? Yep. And that's where kind of the sweetness is found, I think, because, a lot of people, and you read the same statistics I do, they're a little bit, what do I do now, right? Yep. They're a little bit disappointed after they sell because that's been their world. So
the thing that I know is that a builder's going to build.
Yeah.
And, you could take the builder out of the company, but they're still a builder. And I end up talking to dozens of, post-exit entrepreneurs who call me and say, I want to get back in the game.
Yeah.
They want to work with us as a fractional operator because they want that mix of lifestyle. And they're great folks for us to have on the team because they've been there, done that.
Yeah.
And they don't want all the upside because they don't want all of the, but they'll go in and be that interim CEO for a year. And they're excellent at it. And they can't stay on the sidelines.
Yeah. It's hard to take the entrepreneur out of the mix.
Yeah.
Right? So.
Yeah. Well, hey, listen, as I wrap up, I want to give a really clear testimonial for our experience working with you, our experience introducing clients to you that you have taken through the process for successful exits. I just really appreciate our partnership. I mean it when I say you're one of the smartest guys that I know, but you're also like a good, caring human being. So that is really helpful too. So you're really good at the work you do and you're a good guy, and we just love introducing clients to you. So thanks for hanging out with me for an hour and
absolutely
talking shop.
Great. And likewise, right back at you. I mean, we couldn't do what we do without the work that you guys do, typically. And, it's, oh, great. Here's a company they want to sell. Well, we oftentimes deliver that bad news of, okay, you think you're worth 30 million. The marketplace will honor you with about 20 million. And there's that delta. And in that delta is the angst for the entrepreneur. And you guys have done a great job of filling that delta with value creation and really shepherding that owner and showing them how they can get to that 30 And that is just, we'd have to just throw the fish back in the pond and say, call us when you're, at XYZ stage. And you guys are doing a great job with that. And we appreciate it big time. So thank you for what you do.
Thanks, Greg.